Okay, so you want to own a chip fab, not a normal factory. The factory. The one building on Earth that decides whether your phone works, your car starts, and your country's weapons systems function at all. You're the person the world's biggest companies call and wait months to hear back from. Presidents show up in person just to walk the floor. Here's the problem. You can't just buy one. You can't even really build one. And the handful of people on Earth who can are sitting on something closer to a hostage situation for the entire global economy than a business. Let's start with what you're actually buying into, because factory barely describes it. A fab isn't really a manufacturing business. It's a physics defiance business that happens to produce something you can hold in your hand. Everything else about it, the money, the politics, the fact that entire countries reorganize their foreign policy around it, flows from one simple, brutal fact. You are trying to build objects measured in nanometers, smaller than most viruses, with zero room for error, at a scale of billions of units a year, using tools so sensitive that a truck driving past the building can throw off the result. There isn't just one kind of chip business either. Some companies design chips and manufacture them themselves. Intel and Samsung both run this model. And then there's the pure-play foundry, a company that only manufactures, never puts its own name on the product, and just builds whatever its customers designed. A Taiwanese engineer named Morris Chang pioneered that model in 1987 with a company called TSMC, on the theory that if you let chip designers stop worrying about factories entirely, you'd get a small handful of factory operators who became spectacularly, obsessively good at one thing. That bet paid off almost beyond belief. TSMC alone now controls somewhere around 73% of the entire global pure-play foundry market. Not 73% of a niche. 73% of the market that manufactures the processors running inside Apple's iPhones, NVIDIA's AI chips, and AMD's newest processors. That's not market dominance, that's closer to a monopoly the rest of the world has simply agreed to live with, because nobody else can do what this one company's buildings do. Now, let's talk about what it costs to even get in the door. A single leading-edge fab, the kind capable of making the chips inside your phone, or a modern AI processor, runs somewhere north of $20 billion, and the newest facilities are pushing past $40 billion each. Just the physical structure itself, before a single piece of equipment goes inside, can eat $4 to $6 billion on its own, and that's assuming you're building in Taiwan, where the entire supply chain already exists. Build the same fab in the United States, and industry estimates put the cost at 4 to 5 times higher, with timelines stretching years longer. TSMC's own American expansion tells the story better than any estimate could. What started in 2020 as a $12 billion commitment for a single Arizona fab, through a string of expansions in 2024, 2025, and 2026, grown into a $265 billion total investment across a dozen planned facilities. A single company's bet on a single American state now sits above $250 billion. Here's the part that should stop you. That number doesn't even include the machines. Chip fabs run on tools that make a private jet look like a rounding error. The star of the show is the EUV lithography machine, which uses light bounced-off mirrors polished to a precision so extreme that if you scaled one of those mirrors up to the size of Germany, the largest bump on its surface would be less than a millimeter tall. There is exactly one company on Earth that can build these machines. Not the leading company, the only company. A Dutch firm called ASML holds a complete uncontested monopoly on the equipment every advanced chip maker in the world depends on, and it prices accordingly. Its newest generation, called High-NA, needed to make the smallest chips coming down the pipeline, runs approximately $380 to $400 million per unit, more than double the previous generation. ASML has already signaled that isn't the ceiling. A future version expected around the end of the decade is projected to cost upward of $700 million per machine. A single leading-edge fab needs dozens of these tools working in sequence, of which the lithography machines are merely the single most expensive line item. And the machines are only the visible cost. The invisible cost is everything the building needs just to survive its own manufacturing process. A modern fab needs staggering quantities of ultra-pure water, filtered to a standard clean enough that ordinary tap water would contaminate an entire batch of chips on contact. TSMC's newest Arizona facilities are being designed to recycle roughly 90% of the water they use and aim for something close to zero liquid discharge. Because in a drought-prone region, a fab that simply used water once and dumped it would be politically impossible to permit. Then there's power. Climate-controlled clean rooms and ultra-precise cooling systems running continuously, at a scale that can rival the electricity demand of a small city. So you've got the land, you've got the building, you've somehow found the money for the ASML machines. Here's the wall you actually can't get through. It isn't the money, it's the people. Running a fab at the leading edge requires an accumulated body of tacit knowledge, things nobody has ever fully written down, built one solved contamination mystery at a time across an engineer's entire career, and it accumulates fastest wherever the densest concentration of fabs and suppliers already exists. This is precisely why, when TSMC tried to replicate its own Taiwan operations in Arizona, industry analysts openly noted the American version cost 4 to 5 times more and moved dramatically slower. Not because the equipment was different, but because the surrounding density of specialized expertise wasn't there yet. You can build the same building. You cannot instantly build the same 50 years of institutional scar tissue standing behind it. Right now, only 3 organizations on the entire planet, TSMC, Samsung, and Intel, can even attempt to manufacture at the true leading edge, and even among those 3, only TSMC has done it at real commercial scale for years running. Now let's talk about where the actual money hides, because just like every business we've picked apart, the obvious revenue line isn't the whole story. The obvious layer is simple. A company like Apple or Nvidia designs a chip, TSMC manufactures it, TSMC gets paid per wafer. That's real, and it's enormous. TSMC's revenue from customers like Apple, Nvidia, and AMD alone runs into tens of billions of dollars a quarter. But the leverage doesn't live in the wafer price. It lives in allocation. Because building capacity takes years and AI demand spiked in months, the world's most valuable tech companies now compete for a fixed, scarce number of production slots. TSMC's advanced packaging capacity, the specialized process that stacks and connects chips for the newest AI processors used by companies like Nvidia, is reportedly booked solid through 2027. TSMC isn't just selling silicon, it's selling priority. And in a world where every major AI company is racing to secure enough compute, priority is worth more than almost anything else being sold in the entire technology industry. Then there's the layer almost nobody outside the industry thinks about: governments as investors. The U.S. CHIPS Act earmarked over $52 billion to lure fab construction back onto American soil, with roughly $6.6 billion of that flowing directly to TSMC's Arizona buildout, plus another $5 billion in government-backed loans. Intel and Samsung have received similar packages for their own American fabs. That's not a subsidy in the small business sense. That's the United States government treating one company's factory decision as a matter of national security and writing a check accordingly. Which brings us to the layer that makes this business unlike almost anything we've looked at before: geopolitics as a revenue stream in itself. The overwhelming majority of the world's most advanced chips are currently produced by TSMC on one island, Taiwan. That concentration has created what analysts call a silicon shield. The idea that because so much of the global economy depends on chips from this one place, other major powers have an enormous incentive to make sure nothing disrupts it. Export control rules restricting which countries can buy ASML's most advanced machines are now a routine part of relations between Washington and Beijing. When the tools themselves are geopolitically restricted, owning the ability to make the chips becomes something closer to owning a strategic resource than owning a business. Now, let's talk about how this can go wrong, because the same concentration that creates all that leverage is also the single biggest vulnerability in the global economy. Taiwan is also one of the most seismically active regions on the planet. A major earthquake there in 1999 forced TSMC and other Taiwanese fabs to halt production for days, and even a short shutdown at that scale ripples through global electronics supply chains for months, because there's no backup facility anywhere on Earth that can simply absorb that lost capacity overnight. And even without a dramatic disaster, the ordinary version of failure is expensive enough on its own. Intel's Ohio fab, originally targeted for 2025, has slipped to 2027 or later. Samsung's Texas fab has faced its own delays. Roughly 40% of the largest fab projects funded under CHIPS Act incentives have reportedly experienced delays. Money alone cannot compress 50 years of accumulated expertise into a 5-year construction timeline, no matter how large the check is. So let's put a real quarter on the page. In its second quarter of 2026, TSMC reported revenue of $40.2 billion, up 33.7% from the year before, a gross margin of 67.7%, and net income of roughly $22 billion, up 77.4% year over year, driven almost entirely by AI chip demand from customers like Nvidia and AMD. That's the strong version of this business, a company so structurally dominant that even a $265 billion spending commitment barely dents its margins because demand is climbing faster than cost. Now picture the harder version. A new node experiences a yield problem, a larger share of chips failing quality testing, a real recurring risk every time the industry pushes to a smaller process. A geopolitical shock disrupts shipping, or triggers new export restrictions overnight. A domestic fab project, already years behind schedule like Intel's Ohio site, slips again. And the CHIPS Act, money attached to it comes with tighter strings with every missed deadline. None of these are exotic scenarios. They're the ordinary operating risks of a business where a single manufacturing mistake, a geopolitical tremor, or an earthquake in the wrong place can move global markets within hours. So is owning a piece of this business worth it? In one sense, this is the most powerful asset on the table, because this isn't a business that merely makes its owners rich. It's a business that makes governments negotiate, that turns a corporate expansion announcement into front-page geopolitical news that lets TSMC, ASML, and a handful of others sit at the exact center of whether the modern world's phones, cars, and AI systems get built on schedule or don't. But that same power is exactly why it was never actually for sale to a newcomer. You can't buy your way into 50 years of accumulated engineering scar tissue. You can't outspend physics. And you can't relocate an entire ecosystem of specialized suppliers just because you wrote a bigger check than Intel or Samsung already did. The choke point the entire modern economy quietly runs through was never something you could purchase. It was something a handful of companies spent half a century slowly, painstakingly becoming, one impossible batch of wafers at a time.